Good evening, everyone. We'll be getting started in just a few minutes. Good evening and welcome to tonight's webinar, Understanding Student Loans in 2026, Financial Planning for Future Dentists. I'm Linda K. Tyler and I'm the Director of Business Development for ASDA. And I'm so glad that you have joined us as we have an informative and interactive presentation planned for you this evening. During the presentation, we encourage you to submit your questions via the Q&A feature located at the bottom of your screen, probably. Our presenter is eager to answer your questions and help you understand more about the student loan landscape. We'd like to thank Panacea Financial as the sponsor of tonight's programming and for their continued support as ASDA's member benefit provider. I would now like to introduce our presenter, Dr. Michael Jerkins. Dr. Jerkins is the president and co-founder of Panacea Financial and is also a practicing physician in Little Rock, Arkansas. After earning his BBA in economics, he deferred his medical school acceptance to teach middle school science in the Phoenix, Arizona area, while also earning his master's in education from Arizona State University. He then completed his medical school at the University of Tennessee Health Science Center before finishing his residency at the University of Cincinnati Medical Center and the Cincinnati Children's Hospital. He hosts the podcast For Doctors by Doctors and speaks nationally, educating doctors on the intersection of both practice and finance. It is my pleasure to welcome Dr. Jerkins.
Thank you. That was a very kind, warm introduction. Always love being here. Love ASDA. Love working with the students and members. Thank you guys for being here. I just out of the onset want to be very clear. I am not a financial planner, but I am a doctor who has navigated the student loan landscape myself. I graduated medical school with a little over $250,000 of student loans a while back. And then, of course, my path was different on the medical side with a mandated residency, trying to handle all of that. And then after we founded Panacea many years ago, we've helped lots of doctors with myriad of financial things, but student loans is always kind of the elephant in the room. So I am not selling anybody anything tonight. I'm trying to just make sure you guys are informed, especially on a topic like student loans that has been in the headlines and changing all the time, especially over the last 3 to 4 years. It's very confusing. So I hopefully can make it more clear today. But I would also like to encourage you, if you don't understand it by the end, don't stress out. This is one of those topics that you probably need to revisit a few times before you feel comfortable. Just like any complex topic, most of the time it's going to take a few repetitions, so don't beat yourself up if you need more info. Just a little bit about us. We are partners with ASDA. Our whole mission is just to make doctors' lives better. So we do that really with the financial services. We consider ourselves a financial operating system for dentists. We do that with a lot of different ways. This is a picture of me. You already know who I am. But this is, I think, an old map of some of where a lot of our customers are. We do a lot of, I think, great things for students, including checking and savings account, personal loans. And then once you become a practice owner or want to be a practice owner, we help those folks. And then we actually have a legal service that helps dentists navigate employment contracts, which can be very confusing, helps you negotiate with someone offering you a job. Lots of great, I think, benefits to ASDA members, actually, with specialty pricing on Panacea Legal. But that's not why I'm here today. I am really here to talk to you guys about student loans, and this is our agenda. I will end with a Q&A, but I am always happy to take questions throughout the presentation. And if it's related to something I'm discussing on the slide, I'm happy to stop and address those. So please don't hesitate to ask. I have the Q&A box on my screen, so I'm able to see that. And again, like I'm pretty casual, so like feel free to interrupt, ask questions about this topic. So let's talk about the very basics of student loans. And here I mean, it's going to be I'm trying to start at the very lowest level and then try to build up. But, student loans are the loans that the government or a private institution gives you, and then you have to pay them back. While they give you the money, interest is starting to build up. You are not required to pay on these in school. And then when you graduate school, on generally the federal, this is true, but private loans all have their own policies. But for the federal side, which most of you have that are on this call, probably there is a 6 months grace period after you graduate dental school. After that 6 months, you are going to get your first bill from the federal student loan servicer who has your loan. And you will be put in automatically what's called a standard repayment, which is basically a full principal and interest payment that's paid off over 10, 15 years or so. Depends on what you were put into. Um, yes, so there's already questions on private lenders. I got lots to say about that. So give me a second on the private loans. So if you get 6 months of grace period for federal loans, then you're expected to start repaying them. How can you repay your federal loans? There's really three main paths that you should probably think about that are most common. And this is the first one, which is the least likely on the dental side that we see, but some do. More common in the medical side is public service loan forgiveness, also known as PSLF. And if you are basically, there's a few requirements here. And I'll talk more about this, but you need to have 10 years of working at a qualifying employer, which generally means a not-for-profit. You have to be paying on your loans while you're working for them. And you need to be in an income-driven repayment plan. The good news here is like what ends up happening is after that 10 years is up, whatever isn't paid off, your balance is forgiven, which is super cool. And it does not count as income, so you don't get taxed on it from the federal government, but some states you might get taxed on. So as an example, if you had $200,000 at the end of your 10 years working for a not-for-profit, and you did all the paperwork right, everything was kosher, then you would get that $200,000 forgiven. Some states would say, oh, 200,000, that is like you got a check from your employer for 200 grand. You owe us money on that 200,000. Federal doesn't make you do that for PSLF, but some states do make you do that. The other option is kind of the default. It's called standard repayment. That's what you're initially enrolled in. The good news is it pays off your loans in the shortest amount of time, but these are really high monthly payments. So a lot of times, dental students, you graduate and you start practicing or associate somewhere, and you kind of forget a little bit about your student loans. And you get your first bill, and it's like, oh my gosh, what is this? You can always go enroll in an income-driven repayment plan, which is the third, and change it, but that's what you're going to default be put into. The income-driven repayment plan, I'll go over this in depth, is only your payments are only dictated by how much money you make, and specifically on something called adjusted gross income. These offer you the lowest monthly payments. And the RAP plan, which is a new plan that was solidified in the law, the one big beautiful bill, or whatever you want to call it, that is now a law passed by Congress. There are interest subsidies, which I'll talk about, and you can still get those loans forgiven, similar to PSLF, but you don't have to work for a not-for-profit. But it's between 20 and 30 years that you have to pay into this, and your forgiveness is taxable as federal taxes income. So you would receive a bill from the federal government and the state government if you got IDR forgiveness. And those are like the three basic plans or basic ways that you can handle your federal student loans. If you have a private loan from a private lender, there's really one, or I guess two options technically. One is just go ahead and stick with it and pay. The other is to refinance. You can refinance your private loan, which is basically taking a new loan, pays off your old one, and you have new terms. Maybe it's a lower interest rate. Maybe it's spread out over a longer term. You can also take your federal loans and refinance them into a private lender. So basically, again, it's like a new loan from the private lender, let's say Panacea or SoFi or whoever, and they pay off your federal loans. Now you owe the private lender. The problem is if you do this, if you refi out of the federal system, you take your federal loans, you refinance into the private sector, you are giving up all of those things on the left. So you have no more access to PSLF. You have no more access to income driven repayment or IDR forgiveness. And God forbid there's ever a pandemic, if there was some way or reason that the federal government would not force payments on the federal side, you would miss out on that. So my general advice is only refinance out of the federal system if you really know that you're not going to need those benefits. We'll talk about this more later. But the other thing to consider is if you want to take out a mortgage for a home, if you want to eventually take out a loan to buy a practice, start a practice, then the banks are going to look at something called debt to income ratio. So debt to income, so what it sounds is a ratio that looks at your debt payments per month and looks at your income you take in per month. If you are in a federal system, federal loan, and you're on an IDR plan, your monthly payment is actually quite low. So your debt payment is low, but your income could be high. If you go out of dental school and you get this mailer from SoFi or somebody that says, here's $500 to refinance, you're like, cool, I want $500 and I want to lower my interest rate. Maybe your IDR payment would have been $1,000, but your SoFi payment might be $2,500. Now your debt to income ratio is off, and the bank might have a harder time approving your loan for a home or for a practice. I'm not scaring you to say never refinance. All I'm saying is really consider the consequences and feel confident in your plans before you do that. All right, so I have some questions. This is amazing. I love this. One was, is it worth it refinancing private loans? I have both private and federal, thinking of refinancing the private one. That's a great question. Generally, I think those are good ideas if you can lower the interest rate on your private loan or extend the term. When you extend the term, that lowers your monthly payments. It really depends on your situation. You want to understand what your savings are if you do refinance that. But most of the time, if you have a private loan, people just refi those to get the lower rates, lower rates, lower rates. I would probably not refinance the federal loan unless you totally know that you never need to do that. Someone asked, is your debt to income ratio based on monthly payment rather than total debt? Generally for banks, yes, it is based on how much debt you pay, or debt service, what that's called, per month, and how much you bring in per month income wise. So if you have a lot of federal student loans, most lenders will just say, okay, like how much do you actually have to pay on this per month, right? Because if you go to orthodontic residency and then you come out with $700,000 of student loans, no one's ever going to approve you ever if they if they looked at you in the total student debt, they would look at it on what's the amount you owe per month. So that's the answer to that. What's the timeline for the standard repayment? How long for the full debt repayment? So there's up to 25 years for that, I think is the highest. But generally you can set that from as low as I think 10 up to 25 years for the standard repayment. This other question was, what would be a good reason for people to refinance their loans? I think they are asking if they like refinance out of the federal system. I think if you knew for sure that you didn't need the flexibility of IDR, you're never going to own your practice, you feel comfortable with giving up the benefits of the federal system, and you just wanted to not mess with that's a reason. But again, and here's the other thing. If you have an IDR plan, you can always pay more. There's no prepayment penalty. So like, let's say your IDR payment is only $1,000 income driven repayment that you owe per month. You can pay $2,000. You can pay $5,000. They're not going to stop you from doing that. You can do that. There's no prepayment penalties. So that gives you flexibility. again, and this is coming from someone who we refinance loans. So like it's against my self-interest to tell you not to do this, but generally I would probably not refi federal out of the federal system unless you feel very confident. Um, can you refinance as soon as you graduate, or do you have to wait after a year of payments are made for the lenders? No, you can generally refinance as soon as you graduate. Sometimes people even let you refinance in residency, depends on the lender. Man, these are great. I love this audience. You guys are fantastic. Um, so I want to make sure I move on because I think some of these I'll cover here in the next few slides. So I'm going to keep these open and I'll try to make sure I keep tabs of these and y'all keep me honest if I'm skipping you guys. But I'll make sure we get to all these. Here are the interest rates for federal student loans for dental students up through last academic year. This is just for me to show you visually like what this looks like. You can see interest rates were lower in 2020 and 2021. They became higher after that. And the interest rates are based on basically the 10-year treasury, which you don't need to know what that is, in May, June. So whatever that's set at, they basically take that and they add a little bit and say, hey, here's the interest rate for the rest of the year. That's it. And so as rates go down in the economy, rates go down for student loans from the federal government as well. And these start accruing really when you start to take out your debt. If you had student loans during the CARES Act, which was like during COVID, so that would be March of 2020, August of 2023, no interest was accruing on federal loans during that time. So I already mentioned a lot of this on standard versus income driven, but I just want to like show this to you guys. And I think I mentioned most of these. On the standard, there are pros, like you can pay less interest over time because you're paying more per month. They're nice, predictable, steady payments. They're not based on your income. You don't have to file your income each year to prove how much you make. But the bad news is it's really high monthly payments. So give and take. IDR is what I find, most doctors are on because of the flexibility. Now, there's multiple options here. Those have been narrowed with one beautiful bill. I'll show that here in a second. But generally now there's two options going to be available for you guys after you graduate. It really gives you more affordable payments. But the cons are you can have a large tax bill if you do the forgiveness through that, and you have to keep up with the certification. Oh man, I'm so tempted to answer these questions. So I'm gonna practice self-control. And I'll pause here after this next section. So these are the two just head to head wanted to show you guys for the federal student loans. And I wanted to talk about IDR plans specifically. If you mentioned, or if you remember, I said your IDR income driven is based on adjusted gross income. Okay. So let's talk about paychecks and take home pay. You're going to sign with a clinic potentially, and you're going to be quoted a salary, right? So your salary, let's say, is $250,000. Your take home divided over, let's say, 2 monthly payments, so 24 payments, isn't going to be that 250 divided by 24. You're going to have things taken out of it before you actually ever see the money in your bank account. One is going to be pre-tax contributions. That's when you pay for your medical, dental, vision insurance. That's when you contribute to retirement accounts if you have access to them, like 401k, 403b. And if you have an HSA known as a health savings account, you would put money into that. That's all before taxes come out. So then you have taxes. That's federal income tax, Social Security, Medicare, and some states, not all, some states have state income tax. The dollar amount between pre-tax how much money is left over after pre-tax contributions, said another way, the dollar amount between pre-tax and taxes is called adjusted gross income. That is the number that is used for IDR payments. So if you guys are thinking about this, you look at the screen, you're like, how could I lower my IDR? Well, there's a few ways. You basically increase your pre-tax contributions. You increase how much you max out how much you can pay towards your retirement accounts. You max out your HSA, you max out your FSA if you have one. Your adjusted gross income goes down, therefore your payments could go down potentially. That's a little bit different in the RAP scenario now, and I'll go over how those are calculated. But I just conceptually want you to know what the income number is that they're using each year to calculate how much you owe on a monthly basis? I'm going to pause and answer just a couple of questions. It's so tempting. I can't not look over here. Um, Question is, if you're on an income-driven repayment plan, can you make more aggressive payments for certain months if your income allows? Absolutely. Yeah. So if you got a big bonus and you want to pay 10 grand towards your loans, great, you can do that. There's no prepayment penalties. They're not going to say, no, can't do that, or no, we're going to take some out of that. No, you can pay more than what's required in an IDR plan. So absolutely, great question. Another question is, can you switch to IDR from a standard repayment? Yes, you can switch between your payments in the federal system. Great question. Another question is, um, when we start repayment, what order is better, when high interest to lower interest depending on each year, or doesn't matter, just from the whole amount of the loan? Normally, so you can consolidate those loans, and it's going to be a blended average interest rate that's spread out over all of your loans, and it will apply to all of those loans. Now, you can select, if you don't consolidate your federal loans into one, you can pick and choose which payments those go to. Um, I've asked, do private loans have income-driven repayment plans? Let me go back to this slide because I think it's very important. Private loans do not have IDR plans. Like, they don't have them. So when you refinance the SoFi, Panacea, Laurel Road, Sally Mae, I can name five others. None of us are able to have income-driven repayment plans. Not because we don't want to, it's just because the way we're able to structure those, it doesn't allow us the capabilities. Because actually, if you guys want to know the truth, the federal government loses money on federal student loans every year because of IDR plans. They did that so it was more affordable for people to make monthly payments, but they actually don't make money. So that can't translate into the private market because companies, we can't collect taxes on everybody to make sure that we stay afloat. So we got to make money. Okay, I'm gonna do one more. Is it recommended to send extra payments with IDR if it is to be forgiven after 20, 25 years? So great question. This person's like, why would I pay extra on it if I just want it all forgiven? So it really depends on your goals. Some people's goal is to say, hey, I'm going to pay the least amount possible over the longest time so I can get the most forgiven. If that's your strategy, you are right. Don't pay a dime more than you have to. Get the most amount forgiven. Some people aren't so sure. They're like, I might get this forgiven, but I might not. I'm not in the PSLF system. I'm just gonna keep this low payment and I'll add extra on top of it each, couple of months if I can, and then go from there. And if so, it depends on your goals. If you know you want to get it forgiven, don't overpay, don't prepay, don't do that. I keep lying. I'm doing one more question. Let's see here. I'm trying to navigate my mouse. Sorry. Um, I'm sorry, I'm slightly confused. Can you define refinancing again? So, refinancing is taking your existing debt, taking a new loan. That new loan pays off your old debt. So your old debt is gone. It's gone. You now have a new loan, and the new loan might have different interest rates. It might have a different term length. It might say, hey, pay off in 20 years instead of 15. It's essentially a new loan that replaces your old one. And the reason why people do it is because it might lower their interest rate. And that's generally why people refinance their student loans. So I'll promise I'll get to more of these questions. I love these questions. These are great. But I want to make sure I'm able to make it through for the rest of the presentation. So RAP, let me actually, I'm going to pause this. Okay, I'll come back. This is the new income-driven repayment plans. So you have RIP, which was in the One Big Beautiful Bill, IBR, which has been around for a very long time. The reason why these are the last two standing is because they were signed by Congress. And that means if you have a law passed by Congress, it can only be undone by Congress, not like a bureaucratic, or I should say executive order. So these are the two plans. Most people are going to be in the RIP. That's going to be your kind of default IDR plan. The payment that is required is 10% of your AGI, right? So 10% of your AGI, if you make $100,000, I'll show you the table of how they calculate that. You don't have to have any financial hardships. But the best part about the RAP is interest subsidy. So what that means is whatever interest you're not able to pay per month doesn't move forward, doesn't add it to your loan. So let's say you actually owed, let's say, $1,000 of interest that month, but you're in an income-driven repayment plan, so you might only owe 500 bucks. So you pay 500, but the actual loan, if you looked at it, was accruing interest at $1,000 that month. That $500 is gone. It's not going to be added that you didn't pay. That $500 is not going to be added back to your bill. So that is a great point, and most people don't know that. That point was actually interest subsidy was part of the SAVE plan by the Biden administration that the new Congress actually kept in it because it was so popular. So that is a great point. Um, there's some other differences here. I want to make sure I get to the questions, but let me show you guys what that looks like when you graduate. So when you graduate, you're gonna enter into an IDR plan. The RAP is the new one, and they're gonna say, okay, well, how much money did you make last year? Show us your most recent tax return, and you're gonna be like, well, I was a dental student and I didn't make any money. Or potentially you're married and you file jointly, or married and file separately, and your spouse did make money. So that is an option. But this is an example of a new graduate from dental school enters into the RAP. Their adjusted gross income based on last year's tax returns that they filed when they applied was $0. All right. So your AGI was zero. You're going to be in this row, which they'll say, hey, you owe us 120 bucks for the whole year. Like, it's a pretty good deal. So they'll take $120, divide it under 12 payments. You owe 10 bucks a month. That would be your first year. Now, you have to recertify your income every year. So next year, let's say you had $250,000 you were making as an associate at a dental school. You're now in the bottom row. You make over 100 grand, which means you will pay 10% of your AGI. Remember, AGI is adjusted gross income, that graph I showed you guys earlier. So that means they would take 10% of your, let's say your $250,000 your AGI. Well, no, I should say your AGI is 200 because you put a bunch into your retirement and dental medical insurance. Because remember this. So if your salary is 250, you put a bunch into pre-tax, your dental insurance, retirement, you're not going to actually have an AGI that's the same as your salary. It can't be because you have a bunch of pre-tax contributions. So let's say your AGI is 200. You're going to owe over the year 10% of that because you're in the bottom row. And they're going to divide that up into 12 monthly payments, which is roughly 1,600 bucks. That's how you can anticipate how much money you will or have to pay on an RAP plan. Let me see what, okay, so I already went over this. Let me pause here and answer some of these questions in the live in the there's a lot. Is refinancing common? Does everyone do it? Not everyone. Not everyone. There's a lot of people that stay in the federal system and just pay it off in the federal system without messing with the refinance. Would you, oh, that's a good one. Would you recommend choosing RAP or IBR? So generally speaking, most people are going to be in the RAP plan for a variety of reasons. But one of the reasons why some people do pick most people are in the RAP. Some people will be able to pick IBR because of this bottom right. So spousal income not included if filed separately. Some people would talk to their CPA, which if you're in this bucket, you need a CPA, you would ask them this question. They would say, hey, CPA, is it better if I filed jointly as a married couple, or is it better if I filed separately so that my IBR payments would be lowered because you don't have to count your spouse's income and your AGI? Your CPA, your tax advisor, that's a professional that knows more than you, is going to run an analysis and tell you which is better financially. I would not make that decision on your own. I would have a CPA that works with dentists that can help you navigate that. All right. For residency starting September, what are the private lenders willing to lend without a cosigner? There is not a universal list out there, but generally, if your credit score, it depends on the lender, first of all. Every lender has different policies on private loans or private student loans, refinance. Everybody's different. There's no universal underwriting. So some are going to let you do it without a cosigner. Some are going to force it depending on your credit score. It just depends. Um, how does the 6 month grace period work if you're going into a specialty problem? I think they meant residency. Generally, if you are still undergoing education, you can continue to defer your federal student loans because you are still a student or a learner in the dental space. In the medical space, it's different. If you're in a residency that you're getting paid, you're actually earning money, you're not going to be able to do that grace period. Um, this is a more complicated question. I don't want to confuse people, but Brock had a really great question about when to do the RAP. He's basically saying, hey, can I like get out of the grace period and just start paying it now? Some people do that. Some people graduate and they just say, hey, I don't want that 6 month grace period. Let me start paying now. I want to be in this RAP and pay $10 a month and not have any interest accrue. That is a thing that people do. They also do that if they want more months credit for public service loan forgiveness. Um, For the dental students coming out with $500,000, are they able to buy homes? Are banks looking at total school debt? Have you seen issues with this at all? So I kind of answered this earlier, but generally the bank is going to look at your monthly debt that you have to, sorry, monthly payment towards the student loans. They will say, hey, provide us a letter from your lender that proves you're only paying $1,000 instead of $5,000. So for most banks, they're going to want to prove how much you're paying per month towards it, but they're also going to ask you to prove how much you're making, right? Like they're assuming you come out with a $500,000 student loan, you're making a decent amount of money as a dental specialist. Let's do a couple more and then I'll move on. These are great. I love this. Um, Now, dentist 2026 interest rate is around 9%. Is it worth it to refinance? Again, these are really like I can't answer that without knowing more details. Like, what are your long-term goals? Do you need to buy into a practice? Are you going to start a practice in 3 years? Do you want to actually get most of those forgiven? Do you not care and are going to be an associate and don't care about owning your own practice? You just want to pay it off as long as you can. I can't really answer that. I know it's not a very satisfying answer, but there's so many other questions that need to be answered before that. And let me just also put a plug in that I mentioned this with the CPA. If you guys have some complexity with uh you guys have some complexity with your finances and you have a lot of decisions to make, I would not recommend doing these on your own. I would recommend just remembering what some guy said on a webinar when you're in dental school. I would remember that the guy in the webinar said, you need a financial planner who has experience with dentists and that you have a reference that you've talked to that of a dentist they've worked with. That's what I would say. You need a financial planner who's worked with dentists and you can talk to a reference. You all know that as doctors, everyone wants our business and almost everyone is going to act like they're experts and doctors, but it's not true. They might have a really awesome website with people and like that look like dentists or dental students, but you actually ask them if they know anything about student loans. Do they know anything about working for a DSO? And then they have no idea. That's a red flag. Don't just ask for references. So those are questions I would ask. And you said, hey, I have 9% loans. Should I refinance? Great question for your financial planner that has experience and you can sit down and answer a lot of those questions. That can help you navigate that. So just so you guys know, I have 27 open questions that it's like I have 27 unanswered text messages. I really want to answer them, but I also want to make sure I get through the rest of the presentation. So I'll try my best to get to these and maybe at the end if I can't. These are the forgiveness options. I've mentioned most of these: public service loan forgiveness and then income-driven repayment forgiveness. The PSLF forgiveness is really not as common in the dental space, but there's still some that do that. And it's 10 years of payments at a qualifying employer, which generally means a not-for-profit. You have to be working 30 hours a week. You have to be in an IDR plan. And then any unpaid balance at the end is forgiven and it is tax free from the federal government, as I mentioned earlier. And then IDR, as I mentioned, you don't have to have. That's not. You can work any place. It can be private practice, a DSO, whatever. And but you have to. But it takes 20 to 30 years, and you get a tax bill from the state and federal government. PSLF, if you're not sure if your employer qualifies or not, you can actually go to studentaid.gov/PSLF. You put in your employer identification number. You can Google that and then say, hey, like, is this a employer that would even qualify for public service loan forgiveness? That is free. It's a great tool. When you're interviewing for jobs, you can do that. And if you're doing a dental specialty residency that is paying you money, a lot of those are qualifying employers. You can actually get PSLF credit during residency if they're paying you money. The other thing that's really quick, I talked about if you have a big slug of cash, you want to pay more on your student loans. There's signing bonuses are very common for students starting at a new practice. In fact, the average is about $15,000. Okay, so there's a couple things you need to know. If you know you're one of these forgiven, don't pay more. That's the point number one. I've already mentioned that. Point number two, bonuses are taxable income. So they sometimes are taxed when they give them to you, sometimes taxed at the end, depends on your employer. So just make sure you ask that question. Have a good CPA. Now, if someone says, "Hey, we're not going to give you 15 grand, we're going to give you 45 grand," like it comes with strings attached. They're not just giving you that money to be nice. They're giving it because they probably want you there for a longer time. So you want to make sure you ask those questions and have a good attorney look at the agreement. You want to know if it's a signing bonus or a starting bonus. Those are two different things with two different implications. If you're like, hey, I don't understand the difference, or I'm talking to employers now and I have a contract in my hand, I'm putting a short plug into Panacea Legal, as I mentioned earlier. We have specialty pricing for ASDA members, and I think Linda or Alex, maybe you can put that in the chat or somewhere where people can see. But this attorney can look at your contract, answer any questions, be available for a year. They can even help you negotiate directly with someone trying to hire you to make sure you're paid most fairly and structured most fairly. I used an attorney when I first got my first job out of residency. I think everybody should have one, at least their first, if not their second job, because there's a lot of things the employers do to take advantage, unfortunately, of new graduates who don't have much experience with legal contracts. All right. I want to talk about the news for a little bit, then I'm going to answer some more questions. Most of this stuff is actually settled a little bit with the news now. A lot happened with the Biden administration and when the Trump administration came and the one big beautiful bill kind of settled a lot of it, not totally, but a lot directionally is settled somewhat. I already mentioned the narrowing of the income-driven repayment plans, and so that's a big one. The SAFE plan is blocked by the courts. That was the Biden administration plan. There is a cap now, which is a totally different talk. I'm happy to do and talk about for you guys. But for new dental students coming in next year, there will be essentially a $50,000 limit on the loans they can take from the federal government for each year of dental school. So it doesn't apply to anyone on this call. If you're already in dental school, which you all are, this is for really new dental students next year, which is its own issue, and I could talk about for a day. PSLF buyback, I wouldn't worry about. It's really complex, and it's more for people that are in repayment in PSLF already, so I won't go into complexities there. I already mentioned the new IDR alphabet soup, but I'll leave it here for a second and answer some of these questions. Let's see. Now I have 31 unanswered text messages, so I'm gonna try to get through some of these. Somebody asked, what would happen if you started PSLF but halfway through had to stop? Well, nothing. You just wouldn't get those forgiven. You could always start back if you had to stop even for a little bit, because it's not consecutive 10 years. It just has to be cumulatively 10 years. And so some people take a break, maybe they stop working or work at a private practice for a year, then go back to a not-for-profit. It really depends on your situation, but as long as you don't refi into the private market, you could still get back into PSLF. Do you recommend any books, YouTubers, podcasts to learn about topics talked about today and come up with great questions? Um, there is actually a couple. One, I do think that a prudent plastic surgeon is obviously not a dentist, but he is a doctor I know who does a good job with, I think, medical education and literacy, health, financial literacy. Obviously, at Panacea, we have a whole blog with 100, I mean, there's probably 200 articles on these and lots of videos. We cover this in our podcast as well, the podcast for doctors by doctors. Actually, just interviewed the host of 88 Dental Sound Bites about her journey out of med school or sorry, dental school with loans and private practice. Anyway, that was a great episode. So those are good. There are, I think, Physician on Fire is another one that isn't obviously a dentist, but a lot of the same principles apply on student loans and how to manage that. Um, Let's see. Does Panacea have financial advisor, and what services do you provide that benefit students with ASDA membership? Great question. So we don't have a financial advisor. We have lots of them we can connect you with, but we do offer personal loans to those in dental school that want to like pay off credit card debt or need cash for whatever reason, but don't have access to that. It's totally digital application, no cosigner required, all that. And as the members get rate discounts on our personal loans. And then I think we put in the chat the contract review. So that's a big one is that we offer specialty pricing to ASDA members if they need an attorney to look at their contract they're getting from employers. Those are, I mean, generally well worth the money you're going to spend because they can understand a lot of the red flags and things you need to shore up risk wise. And those are the big ones. Now, we are members or endorsed by the American Dental Association. So when you do graduate, they endorse our practice finance and the practice banking that we offer. But go to our website. There's a lot of great information, educational information. So I think I answered this one. And all right. For specialty starting July 1, are we still able to get Grad Plus loans? So the guidance right now, and this is the guidance, so this isn't by law, but the guidance is that if you have already used Grad Plus, you will still have access to Grad Plus. The guidance from the Department of Education is if you've not used Grad Plus going into this next academic year, you will not have access to Grad Plus. So the read is by all the people in the field, this is called kind of all crazy new frontier, is that the dental residents and those already in medical, dental, and vet school will have access to Grad Plus. It's really for the people entering medical, dental, or vet school that are going to be affected by that $50,000 cap. I will do residency this July, but I would like to open practice in 4 to 5 years. Um, yeah, so and this is the same, I think, question about should I refinance at 9%? So I think generally, and again, this is a good for a financial planner, but I think high level, you really don't want to refinance out of the federal system unless you know for sure you're not going to need a flexible IDR payment. And when you go buy a dental practice, again, they're going to look at your monthly debt payments that you owe and your monthly income payments that you're going to bring in. And if that debt is too high, you graduated medical school or dental school and you bought a really big house, you bought a boat, you refinance your student loans, you have a lifestyle that requires a lot of monthly payments, that debt load is going to be looked at. And they might say, hey, like you're a great dentist, you have great experience, 4 to 5 years clinically. But as an individual borrower, your debt load per month is too high. Like we can't lend you the money to buy a practice or open a practice. So you really got to plan for that. You got to plan for that. When you graduate dental school or residency, you got to think about your major financial choices, like buying a home, buying a car, and your month to month lifestyle. Because if you start, you're going to have the money to do all these things, but you're not going to have that debt is going to be high, and you might on the outside look like you're doing really well, but under the covers, you're actually don't have much saved, and you really are living on the margins. Um, and let me pause real quick and just say the trick, I think, of being a dentist or physician, and when you think about wealth, is wealth how I define it. Wealth is being in control of your time and doing what you want with your time. If you want to work and just see a ton of patients, that's great. That's totally up to you. You have every right to do that. But if you put yourself in a situation where you have to see patients every day and work your every weekend, and because you owe all this money for your boat, for your credit cards, for the vacation homes, vacation, you actually might look like materially wealthy. But I would argue you're not wealthy because you're not in control of your time. You're actually having to work to pay off your debt. So you really need to think about this long-term, big picture. When you start graduating, you get all this money and you can really mess things up if you aren't careful with your big spends. And again, if you aren't careful with your refinance. All right. I think I answered this one. Brock's answer question about going into RAP before July 1. Um, Is it possible to decide how much in percentage I would want to pay principal versus interest? I prefer pay all interest principal first. Sorry, that's not possible. So the lender for your student loan is going to require you to pay principal and interest each month, and that's called amortization. And basically, you're paying more interest at the beginning and less interest towards the end of the payment. So that's not possible to pay only principal, unfortunately. I wish it were. Um, if I want to aggressively pay off my loans in less than 5 years, is it better to be on federal loans or refinanced private? Honestly, for me, again, this is someone that it's going to require a real like Excel work here. But generally, if you just want to pay it off fast, you can stay in an federal system and pay more. You're not going to get any prepayment penalties, and you get the flexibility. Do you have to start paying your loans after the 6 months, even if you start a residency? So I think I answered this before, but essentially, if you are still a learner that's not earning an income, you can continue to defer your federal student loans. Now, every private lender is different. They're going to have different policies. But for the federal government, which most of you guys, if you're in dental school now, have as federal loans, and you start earning money, it's a residency that pays you, then you will start having to pay on that. But again, don't worry because your AGI is quite low, and those monthly payments will be not that much. How do you know if your IDR will be forgiven or not? So you would need to make sure you're checking your balances, talking to your servicer that you're enrolled in the right plan. But if you're an IDR, again, after 20 to 30 years, depending on your specifics, those will be forgiven. They will give you statements each month to show you how many payments you have and kind of how many more you need to have those forgiven. Um, Okay. Wait. Oh, this is a good one. Wait, I'm confused. What do you mean forgiven? After 25 years, our loans go away? Why doesn't everyone just make low payments then? Great. I love this. So, it again, it goes back to this tax. There's two things. One, it goes to the tax bill. Let's go back to the forgiveness slide. It doesn't just go away. It does go away, but if in the idea of forgiveness, the state and federal government looks like you just got a big fat bonus and they're going to make you pay for it. So if you got 500 grand forgiven, that government, the state and federal, is going to ask for a big tax bill. So that's a big expense. On top of that, you would have to analyze, would it have been better for you to pay more and not had that big expense at the end of it. So this is again a good question for your financial planner to run an analysis and tell you that. We know plenty that are good. I can tell you them. They're not a financial relationship. But it's a great question. Like, why wouldn't everybody do that? The catch is you get a big bill at the end, big tax bill. What kind of forgiveness do we have after or right before graduation? There's really no forgiveness outside of these two things, public service loan forgiveness, which requires 10 years, IDR, which requires 20 to 30 years. Here's a question. I'm trying to prevent accruing interest on top of the interest accrued in my loan. So I'm paying off my monthly interest per month. Do you recommend I put that money towards the principal amount per month or keep paying my interest accrued per month? So if you can, if your lender allows you, let's say you have extra money you want to pay towards your bill, if your lender allows you to pay towards the principal, you should do that because then that lowers your principal amount, which is what the interest was calculated off of. This person asked if you have four different private loans with various interest rates up to 15%, how do you refinance these? Are all of them consolidated with one new lender? That can be, absolutely. Also, not sure if you previously mentioned, but do private loans have forgiveness? So I'll go back to this. I think it's important. So sorry. Your forgiveness options are gone. That's why I have them lightened in this slide in the private space. You don't have any options for forgiveness in the private space. So those are public service loan forgiveness and IDR all in the federal system. Refinance loans that you refinance either from a federal to private or private to another private bank or lender do not have forgiveness options. This person asks, if I already have federal student loans from dental school, will I still be able to take out federal student loans during dental residency? I think I've gone over this one. As long as you've already been in the system, you should have access to Grad Plus. Those are for really new dental students. I think I answered this one. Do you have to pay a big tax bomb at the end of RIP? Yes, I've answered that one. You do if it's IDR forgiveness. This is a good question. Since RIP is 30 years and IBR is 20-year forgiveness, do you end up getting more forgiven under IBR? It really depends on not necessarily, because each of those plans calculate how much you owe per month differently. So again, it's a great question for a financial planner who can run an analysis and tell you what is the more advantageous. Really depends on your situation. How does the new big beautiful bill affect borrowing for residency programs? I think I've answered that one. It should really apply to residencies. If you'll be a D1 starting in July, who has a limit on their federal loan? Where do you recommend them to start to look for private loans? How do you find the best interest rate without running multiple credit inquiries? This is a tough one. Like, again, this is a whole other talk. But I estimate that there will be up to, I estimate based on the data we have, 10 to 13% of dental students who will need a private loan, but will have a low credit score or no credit score because you've not built it up, hadn't had a chance, you've been in school. So this is admittedly going to be a tough thing to navigate. I can tell you we are working on this at Panacea. I do not know if we'll be able to help this fall for dental schools, but we should be by the next fall. You can go to a website called Elm Select. Elm Select is basically it shows you the options for that school. It's not comprehensive, but it's pretty darn good. And that tells you like apples to apples, the credit or the interest rate ranges. Keep in mind, like, just I'm telling you a little like inside baseball here. A lot of the rates you're going to see, you're going to say like as low as 2%. You're like, cool. How do I get that? And like, well, you got to make $100,000 and have an 800 credit score. Like, well, obviously I don't have $100,000 and I don't have an 800 credit score. So they might quote you they might show you a low number on the range, but you might actually qualify for that. But long answer short is go to Elm Select and type in your dental school and they will show you available private options. Linda, I know I could like sit here all day. This is amazing. We
I
have
know you have a lot of questions, and it's been
65
really
questions.
great.
Great.
I know you've had a ton of questions, unusually more than when you did this presentation previously, although this
Yeah.
has been a heavy topic around the student loan. So why don't
Yeah.
you take a couple more, and
Okay.
then students, we will make sure that in our follow-up that we provide you with contact information for Dr. Jerkins as well as Alex, and they will be able to answer any additional questions that you may have even after this webinar.
Yeah. So real quick, Linda, just before I wrap up, these are the only last prepared slide is all of these people, including the federal government, are going to check your credit. We've already mentioned this a couple times. How is credit even calculated? Well, here are the categories that are looked at for your credit score. The biggest one being, do you make payments on time? That means your phone bill, car bill, your credit card bill, your internet. And if it's less than 30 days past due, it's considered on time. If it's not, that's going to really ding your credit score. So if you're that person who's starting in July, my pro tip is pay your bills on time and check your credit score regularly so you know what it is and you know how to make it better. And also, if you check it regularly, you can then determine if there is any mistakes, because that does happen. Some people have mistakes in their credit, and that lowers their score artificially. So, yeah, let me take a couple. I also want to, because someone asked you again, what does Panacea do for ASDA members? Those are in the chat. Feel free to visit those sites. We have tons of good blogs and articles as well. So I'll take a couple more, Linda, and then I'll wrap it up.
You can talk a little bit about what Panacea does do. I know you mentioned it, but in
Yeah,
terms of the loan, is
yeah,
$10,000 student
yeah.
that you can receive if you're a D4. You don't need to have a cosigner, and that money you could use for residency or transitioning from dental school to residency. But Dr. Jerkins, can you talk a little bit more about that?
Yeah, so we really designed this based on my experience and our other co-founders and physician Ned Palmer's experience, which was we were in school and we had to load up on credit cards because our student loans had already been spent, and we had things that happened for us, either illnesses or things with our personal lives that we had to load up on, unfortunately, on high interest credit card debt. And so there was no good option for people in school. Unfortunately, you go to these lenders and they're like, no, you don't make money. Why would we lend you any money? Which I think is the wrong way to look at it. But and so really it's a way for students to access money as needed for them that is about half the interest rate of a credit card on average, and is accessible, for things that you need. The other reason people use it is for in that period of transition, like you said, Linda, you're done with school, you don't have access to loans, but you need to move. You are going to residency, you're going to your first job, and you don't have any money to make the move or put a down payment on an apartment or whatever it be. People use the PRN personal loan for that. And then the other thing I already mentioned is the having an attorney look at your employment contract is like I cannot. So just a quick anecdote, Linda, is I had a friend of mine that ran into a doctor recently that was graduating residency, and he said, "Hey, like, how's the job hunt?" He said, "Great." He said, "Well, have you had an attorney look at your contract?" This guy is like, he's a friend of mine, so I think he was trying to, spread the word. And he said, "No, I looked at Panacea Legal, but I didn't go with them because," he said, "my employer told me they gave me the best offer they could."
Hmm.
And for those of you who have not negotiated for a job ever, that is like almost never the case.
Hmm.
Almost never the case is the employer going to give you their best offer first. They are giving you not their best offer because they hope you take it and they don't have to pay you as much. So it's helpful to be armed with an attorney who has the data, knows how much you should get paid, knows how much they should be covering for insurance, knows all of these things that can then advocate for you so that you do get the best offer, because that is not the way the world works for business. It is most likely always going to be some negotiating and haggling. And if you don't have experience in that, having an attorney who does have experience is worth its weight in gold. So I'll pause there.
And that benefit is about 20% off of what you regularly charge.
For
So
as the member,
as
that's
an
correct.
yeah, so as the member, you also get a discount on that. So this has been wonderful. And on behalf of ASDA, I want to thank you all for participating in tonight's webinar. And I wanted to thank Dr. Jerkins and Panacea Financial. We appreciate your continued support, of course, for ASDA and the member benefits that you provide. More information can be found about Panacea on our website. It's all under our deals and offers. So you go in and you have to make sure you're logged into our website so you can actually access any of our deals and offer benefits. And if you would like to view this webinar, which I'm sure many of you will, again, it will be posted in 1 week on ASDA's YouTube channel, and then it'll be saved to the webinars directory at asda.net, asdanet, asdanet.org under the programs and events and webinars page. We will also be sending you out a reminder when that webinar is available so you won't miss it. And in that reminder, we will also send you information about the benefits that Dr. Jerkins has talked about and send you those links so that way you'll have it at your fingertips. But again, Dr. Jerkins, always a pleasure, always a joy having you speak to our students.
Awesome. Thank you. Pleasure to be here. We do speak at a lot of schools as well. So if this could be helpful for your chapter, for your school, like we want to spread the word, really help our ASDA members across the country. So thank you for the opportunity. My email is down here, michael.jerkins@panaceafinancial.com. Please email me if you have questions, and hopefully this helped. But again, it's a complex topic. Don't hesitate to ask questions or find a professional to help you. So thank you guys and have a great night.
Good night, everyone.